All right, good afternoon, traders, and welcome to the Bookmap Academy meeting. This is Bruce at Bookmap, and what we're going to do is go through your trades, your markups that you have done throughout the week. If you participated in the week, if you participated in the week, if you and the way that you do that, or the way that you join, is very simple. There's no cost at all, but you'll just come over to the website here, click on the More button, bookmap.com, click on the More button, and then under Community here, you'll see Bookmap Academy. Click on that. And then you'll sign up in here. You'll read about it, the steps, etc. You can get Bookmap for free in here. You can get the add-ons for free, some of them, and you can also get data for free. But you will have to earn it, basically. And what better way to earn it than you journaling your own trades and becoming a better trader? Okay, so if you do that, then we will help you out by giving you Bookmap. Okay, now it's a whole process, and you'll have to go through that in order to get a Bookmap for free. First, you have to demonstrate you're making good quality content with your markups, and just look at some of the examples today. And then you do one per day. That's it. That's the threshold. Just one per day. And you can get Bookmap for free. If you do two per day, you can get some of the add-ons for free, like stops and icebergs. So read through the process in here. You can sign up on this page here as well, and you'll request a spreadsheet. You'll have to mark it up in a spreadsheet, and then that's it. You just keep the spreadsheet open during the day. When you post in social media or in our Bookmap Academy room, then just copy the link and post it into your spreadsheet. That's all you have to do. I'm always kind of amazed. People do a great job marking up their charts and journaling, and then they don't request a spreadsheet, and they don't paste the link in there. That's all you have to do, and you can get Bookmap. All right. So anyway, just wanted to go over the process a bit, and then we have this meeting every Thursday, and we will go through some of those pieces that we'll kind of pick and add into the meeting here, and then we'll open it up, and you can come up on stage, talk about your trades, and get feedback directly from the coaches and the community. All right, so let me jump in with the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, now there's a couple of news items I got to go through here, and also our Bookmap Academy process. I'll come back to that in just a second in the pilot program. Last days here, really, it's a short month, but you can still enter the trade control panel challenge edition here of the Bookmap Blue Jacket competition. If you're interested, take a screenshot here, enter the marked up charts that you use here in the Bookmap Academy. You can also use here on the Blue Jacket competition. You might as well, and you've already done the work. So all you have to do is post in X, Instagram, or LinkedIn with hashtag free Blue Jacket, and then you're entered. You can win 3 months of Bookmap Global plus data and the Bookmap hoodie if you're chosen. All right, I need to go back a bit. And our process in here in the Bookmap Academy, interestingly enough, 1, 2, and 3 here, we don't really go through in the content and the chart markups. We really focus on your setup here, but these first 3 items in here are unbelievably important. You need to filter for a high probability trade. Okay, and you're going to look at what's moving the market. Okay, the impetus out there, data, geopolitical, maybe it's a big technical level, maybe it's all 3. And now you know things are moving. And now you're going to be looking at key levels on higher time frames, because that's where most traders are going to react. And then you start going through scenarios at those key levels. What will I do? What is my outlook? If price is going down toward a key level, am I anticipating, is it gone down for quite a while? Is it the end of the move? Am I anticipating buyers to come back in at that key level? Am I anticipating people to take profits and sell, or I mean buy back at that level? Well, then you might be looking for a reversal. Okay, and that's how you will filter out, and they're just so critical, these 1, 2, and 3 here. Okay, that you will pick a reversal setup to trade for that day. That's what you'll be looking for at that key level. Okay, now if you don't do that, and you're just trading a reversal someplace in the middle of nowhere, even time of day matters. It's part of the number 3 here, your time of day. And you're just randomly like, oh, there's my setup, I'm going to take it. You've really like skewed the odds against yourself. Okay, so 1, 2, and 3 here are really important, and then finally you get to your setup. It's very simple, it's very straightforward. You should know it intimately. You know how to react to it. You've studied it. You know you have an edge with it. You go through your checklist, you grade it, you determine your risk, and you take the trade. You look at the order flow to give you the direction here. All right, enough said on that. Bruce's pilot program. Okay, this is a subset of the Bookmap Academy, and it focuses not just on your setup, it focuses on one particular setup at the moment, and we're just going to add another one in a few minutes, well, probably in some days. I would say maybe by next week, we'll add another setup in here. Okay, the low volume pullback that I know I've been trying to get to that for months now, several weeks. Anyway, the interest here, or the idea for this came out of watching thousands of traders at many different levels of skill levels, and the biggest gap is they don't know if they have an edge or not. They're just taking the setup. If you don't know if you have an edge with that setup, you are basically gambling. You just don't know. And you have to know if you have an edge. We have a process that's structured here that will go through that will allow you to build your own edge. And this is the fastest method I've seen. If you're interested in this, it's also from bookmap.com. There's no cost to it. Under community, Bruce's pilot program here, and you can sign up right here. Okay. You will need to have Bookmap for this though. Okay, so you'll need Global or Global Plus in order to participate in this. All right. All right, that's enough on that. And let me get to some of your content and the coaches here and bring them up to the stage. Okay, let's see here. DNT came in immediately. And let's see. Oh, we got John in here. Okay, come on up. And who else is here? One at the moment. That is just fine. Okay. Thibaut, you've got to start. You've got to get a spreadsheet together. You're in here every week. You have great content. I'd love to go over it. You're creating great stuff. So sign up for that academy. You're already making the content, so just repost it into the academy or on social media, and just copy that link and put it into the spreadsheet. That's it. You're already doing it, so you might as well. And plus, add it into the Bookmap Blue Jacket, and you might win. All right. So let's see here. I wanted to start with Nan. Nan has been doing some really great work, and we'll just jump over here. And I saw this in your spreadsheet, Nan, and I'm going to invite you up to the stage here. I hope that your mic is fixed. I know we tried to get you on stage last week, so let me know if you can come up on stage. There you are. Excellent. And I don't know if it was there was something that you did just recently. It was just fantastic, and I didn't see it in the spreadsheet though. So anyway, this is a good one as well. And you're uh, really becoming good at this setup, your markups, and putting these pieces together for really high quality trades, and you can see the results. I mean, some beautiful stuff in here. Good morning or good afternoon, John. So let's actually, I think you've been commenting quite a bit on some of Nan's work as well, John. So maybe you want to start off, and we'll jump in with this one.
There we go. Can you hear me okay?
Yes, now I can hear you.
All right. Yeah. She has been putting in some good content with this trade, and it demonstrates a really good read of the order flow. She's showing the passive accumulation coming down. She draws her trend line, and she also is marking liquidity above, which will eventually be her target. Which, for my work, that's super important. She enters after the second trend line is broken, and my only comments have been that typically with that kind of a run up at her entry, usually you get a pullback. You get some kind of a pullback. It's not going to reverse and make a V. At least what I like to do is always look for that pullback. And she notes on here the little better entry around 68.97, and she was right to do that. There's less risk involved, and to me, that's the perfect entry. She's calling it perfectly. It's an excellent read. And with that entry at 97, you could put your stop right down below 96 maybe. Because if it takes that out, you probably revisit 95 and 94. So there's no reason to run that risk down that far. So your risk to reward is enhanced if you wait for that pullback. And then she has her target up at liquidity. Yeah, that's beautiful. That's all you need to do. You can make a living off of this.
Yeah, absolutely. Let's see. Nan, would you like to jump in and explain your trade?
Yeah, Bruce, can you hear me? Is
Yes.
my audio coming through?
Yes.
Okay. All right. Very good. No, I think John covered the points, and, the illustration in the charts itself, just confirm all of the um, spread, spread line break-in accumulation features. And, I just look for that. I've developed the eye for that pattern, basically from your training videos.
Mhm.
So once I could find those points on the chart, then I just wait for the entry. And in this trade and a couple others recently, my entry seemed to be earlier than it should, but the trade did went my way eventually. I could have gained some more points had I entered at the better entry arrow that I have there on the far right.
Mhm.
But I think I'll come to that point eventually. And
Mhm.
John pointed out one earlier this afternoon with the same issue. So I'll
Mhm.
get to that.
Mhm.
It's just a matter of, perhaps practicing more with it and
Yeah.
understanding the flow and the timing and all of that.
Mhm. Mhm.
Yeah.
Nan, just a quick question. What levels, like steps one and two, do you generally look for as far as a level to trade off of? Is there a certain few things that you look for, previous highs or lows or intraday highs and lows, that kind of thing?
Yeah, well, I go back to the daily chart and I look at,
Mhm.
the daily
Mhm.
from the top, maybe a 2 hour or 1 hour, and then
Mhm. Mhm.
maybe 30 minutes.
Mhm.
I look at the bigger picture and you know, bookmap, unfortunately, the more you zoom out, the less that you see clearly. So I look at my Thinkorswim charts on
Mhm.
3 different monitors and I could see
Mhm.
the bigger picture. So
Perfect.
that's where I start to see where
Mhm.
the key levels are. And
Mhm.
then within Bookmap itself, I zoom out,
Mhm.
going back the past couple of days to get an
Mhm.
idea of a more recent range in terms
Mhm.
of key point.
Mhm.
Uh, So that's initially what I used, and that helped me to gauge better the trend. And
Mhm,
once I could determine the trend, whether we're going up or down,
mhm,
in Bookmap, zooming in, the practice of zooming in too closely, I have found is dangerous. So I
mhm,
constantly have to zoom all the way out and
mhm,
in, back and
mhm.
forth
Absolutely.
to
Mhm,
understand the
mhm.
concept of where the flow is going, and that helps me as well.
Right. Excellent. That's one of my favorite things about Bookmap is the scroll wheel. Instantly, you can adjust how much data you're looking at, and I concur with everything you said. I agree with it because taking a larger term view, it also allows you to see the liquidity map from a distance. And then you can see where all the players are placing their orders. And then you can zoom in and get your entry. But I think you're doing a fantastic job. I don't know how long you've been working with Bookmap, but my goodness, it's really fantastic work. So congrats and keep going.
Thanks for the feedback.
Sure.
Yeah, great, great. DNT, is anything you want to add to this?
Hello, Nan. No, this is great. I don't know how long you've been doing the trendline break accumulation either, but this looks pretty good. Of course, there's always an argument to be made to when you see the impulse up and you get the pullback into the zone, where if you were to draw a horizontal structure at the lows to the left and it pulls back into that, then that gives you defined risk, and the entry might be a bit late when you're looking to actually take an entry inside of the in the zone. So if Bruce were to draw a horizontal structure at 15:15 on the time,
Around here? Or,
yeah,
or,
around there,
or
that's
around here?
fine. Around the bottom, yeah,
Okay.
around the bottom, like where it's going into the liquidity.
Oh, you mean way down here?
Yeah, like a rectangle. Yeah, like that
Okay,
whole zone.
okay.
That whole zone right there. I mean, it's obvious always in hindsight, right? Because I mean, it might I can easily see an entry if it pulled, when it impulsed up and then it pulled back, and then if you took that long, let's say shortly after 15:20, and it pulled to the top of that box, and somebody took a long there, I can easily see, maybe getting a scale and then it coming all the way back down and then stopping the position out. So I don't know. I like your entry. I think it's good. Uh, there's always arguments to be made for better entries, right? But this looks good. I don't know how long have you been working on these?
I started with the book map back in September, but I did, play with it on Thinkorswim platform with its limited features
Hmm.
about a year now. But I joined the Discord back in September, and I've just been an observer in the meetings off and on, and I decided to get more involved as of January. So that's why I started posting my charts.
Very cool. Yeah, this is a great place to start. All these all the trendline break accumulation and the pilot program have this like support and resistance um concepts built into it, and Bruce has really simplified those concepts into just four criteria. And when you see those four criteria, you're establishing a basis for that support is here. So when the market's coming into those passive bids, that's like passive support, and then you get those aggressive buyers, you get the aggressive support. So you're starting to see the market calm down into a support area, and you see two types of support that are potentially holding this market. And assuming that it's like at a key location, and um, you have impetus for your trade, then you put the trade on and just hold it, and either it stops you out or it goes to target. But This concepts that we were talking about for the pilot program, they're great. They're great to learn, and you keep doing this, and it just ingrains it into your head over and over and over. The more you do it, and then you actually see it, and then you let the trade come to you. Yeah, it's great. The more you keep doing it, you're gonna love it.
Yeah, I
So,
echo that DNT, and like well, the more and more, in fact, you know, I always recommend trading one replay file many times, and don't try to scale in. Just replay it again. If you didn't quite get the entry right, or you messed up, or you placed your stop someplace and you got stopped out, so what? Just replay it again, back it up and replay it again. Try to get 5, 6, 7, 8 replays out of that one file, and look at the details. If you start scaling, you're not going to see those details. So just all in, all out, and work on your entries, your exits, and trailing your stop. It seems like it might be a longer way, but it's really much faster, and you'll be much more precise and much more tuned in, and you'll notice things that you'll like here. I mean, you're starting to notice already, like the kind of this whole context and this kind of flip of order flow, and you're really getting it. So for example, if we take a look at this one here, there's one level really, and maybe two here, of pretty high liquidity that's getting filled on the bid. Okay, so there's your passive accumulation, but it's not a whole lot, right? But you note here, you get this aggressive accumulation coming in. Okay, great. Is it enough? Well, we never know. It might be, and it might come right up to here, and fill that. But it's not a surprise to see it come back down and fill more liquidity down here. And then, okay, buyers were here earlier. Look at the same levels. I mean, these are just things to note as you continue to use replay mode, and I know you're in the live market here, but like in sim, but like you can replay this file. Look where the buyers came in. They came in here again. The aggressors here, plus you have the passive support here as well. Okay, so now we get more aggressors in here, just like you said, or are noted here. Just one key thing, you can, if you hover over this number over here, left click, hold, and drag it up, you'll see the volume bars a lot better. And I recommend that you do that, and at least play around with it and see if you like it. But then you get one more pullback here. But now, what do you note? Like, this high liquidity is up at higher level. You don't see as many sellers in here. So we're seeing this transition from sell side to buy side. And look at the even there's high liquidity up here. Okay, it's filled. It goes right through. It doesn't even really pull back. Look at this though as well. You'll note these kinds of things. And this is kind of chasing up after. They're pushing it. We're getting nothing but aggressors in here on the buy side, and you'd look for it to come up into here, and because of that kind of aggressive activity, you might want to even look for it to come up into here or even above, because this is really it's the context here again. Okay, because what you've got is you've got the buyers coming in. The aggressors, like you had marked up, but you also have this liquidity kind of chasing up after here and pushing it, this is it's a good sign that this, and look at the angle here as well. So I'd be looking for this to fill, and this up here. I don't know what if this was high of the day or high, certainly high of this move here, but maybe it continued on up quite a bit. So the compression is in here. The change in the order flow from sell side to buy side is in here as well. You marked it all up, got in here, you got a great entry, and you know, you mark that maybe here would be even better. I don't know. I mean, you can even be more aggressive in some of these areas in here, depending on your style of trading. You know, hit a single up into the swings. You know, these are just things to consider. I don't recommend that, because you seem to have, like you mentioned, you're zooming in and out. You've got your own style. You've got your own time frame that you're trading. So go with it. You know, like DNT said, you know, we're always trying to, you know, optimize, you know, stops and entries and you know, take profits. Just continue on doing it again and again in replay mode. I think it'll be really helpful. So those are my comments. I don't know, Manan, if you have anything else you want to mention.
Yeah, in closing, I would, you know, thanks to DNT for his comments and feedback. I appreciate that. As John had pointed out earlier on, the high liquidity bands that you see at the top and the bottom, you know, I've gotten, I guess, not used to seeing them, but it's like when you see them, you know, you have your eyes on it. So it happened this morning, late mid morning, close to midday, I believe. And then on
Yes.
this chart, we sit at the top and the bottom. So you know that, you know, those are things to look for, and you sort of rely on them to sort of help them with your confluence. So that helps. And then the other details you pointed out, Bruce. But what you said about the liquidity on the top right side of my chart there, that liquidity on the,
Up above
I
here?
guess, no, below there,
Here.
just to the right of where
Oh, underneath. Got
the
it.
dot,
Right.
yeah.
Yeah.
Right. I
Under
always
here.
wondered, right, that region there. So I always wondered how to interpret that. So you've explained it. I'll have to go back and, you know, listen to the tape tomorrow just to make sure I understand and observe it, because I never knew how to play into that or to interpret that and use it as part of my overall decision in terms of timing when to exit the trade. But I think I understand the concept, and that I'm glad that you did point that out. But that's all I have, and thanks to, you know, the team for their continuous feedback.
Yeah. Yeah, sure. Well, I mean, to answer this in here, look at this structure in here as well, right? So once we break that structure and you get those buyers coming in, the aggressive buyers coming in, you know, like you've got this kind of activity underneath. Like, are they short? You know, are they trying to get filled? Are they you know, kind of screwed? Are they spoofing? Are they kind of skewing the order book along with you know, aggressive buyers in here? It doesn't really matter. I always kind of thought it was a spoof, but like, what matters is what's the reaction to it. And if you see buyers here stepping in and sellers aren't interested, like, this is going to this is fueling it even more to the upside. Okay. Now what you'll see many times happen is after it goes up into these areas in here, and they're still, let's say it goes up and they're still on the bid like this, but after it goes up quite a bit, at a certain point there'll be really high liquidity up here, and the sellers will take it on. They'll hit it, you know, and like now you're kind of like, okay, you know, now maybe, you know, this is where like something more is going to happen. It's probably this exponential move is over. Usually what happens is you get some sort of chop in here. You know, it can pull back all the way down here before coming back in and then getting continuation, or it could be the beginning of a reversal. This is where to tune in though, basically, and start to look for it. But here there's no tuning in. This is all like, it's greased lightning to the upside, basically. That makes sense.
Okay, I got that. Thanks.
Yeah,
Thank you,
yeah.
Bruce.
I mean, combine it with the structure. That's really key. You know.
Yes.
So it's breaking out from that structure, and that's where you really want to, you know, you start to put this context together. Nan, if you recorded this file, right, for yourself?
Yes, this was, yeah.
Okay.
I do have it.
So go back and retrade it.
Okay.
Yep. And here I'll show you, for a lot of you guys who in the pilot program, you know, have probably burned through all of the, I know that many of you have kind of burned through the replay files. And you know, they're still good. I still go through them. I just want to show you something quickly though in Bookmap. That's really fantastic. Okay, so this is 7.7. It's in 7.6 as well. Is go up to no, I'm sorry. Now in 7.7, you come down here, and you'll stop the like I'm in the live market right now. Okay, so I will stop it, and you say, "You sure you want to stop the recording?" Yeah, okay, we're going to stop it, and then take, you know, wherever you want. Like if this was the little setup in here and you're looking for this move in here, let's say a little trend line break accumulation right in here, you know, whatever, then you can come in here, add in custom time. Okay, and it's a little tricky, but you gotta hover over where you want to be, and okay, so you know, after 3 o'clock here, and then you'll put in like you know, 1500, and or actually let's go down to 14, and then this will be, that'll kick us up to 1500, or 3 o'clock East Coast time, and then another one in here is you can even select a smaller time frame in here if you like. You can choose like the beginning part and the end part. And then you can also choose for any of the instruments that I have open here. It'll select the one you're on, and then what you can do is just export this, and you know, output this here, and that's it. Like you'll have a data file for yourself. So this will lighten it up for you, instead of having a big old file for, you know, 4 different instruments over the entire day. So it's a great feature in Bookmap. So you know, use it. Anyway, let's go back and we'll start again here. Okay, there we go. All right. So let's see. All right, Nan, I think we covered you pretty well there. See if there is, there was another one I put in here though. This is it. This is yours, is it correct, Nan?
Yes, it is.
Okay. Boy, I had a comment on this one, but why don't I really like something I saw earlier, but I didn't see it in the spreadsheet. So why don't we go over this one, you know, quickly, I think, and you know, because there's something in here that's good, I think, as well. And DNT, I'll let you you start.
Was there another chart with this, or was this the only one here? That looks good though. Can you hear me?
Yeah.
Yeah. Okay. Yeah, this looks really good. I like the a lot, and like these, Nan really likes to wait for those entries, assuming you actually waited and didn't enter in that other area there. But I mean, I do that
sometimes where I enter too early and I'll get stopped out of the trade before it starts to go in my favor. But waiting for it to actually, for the market to go from like that imbalance to the downside and then go into balance, and then just waiting for it to ferment, waiting for it to, while it's going in that balance and it's starting to compress, and then it starts to break that structure, and then I mean that entry is dang near perfect. And it just goes right back into, and it goes out of balance to the upside, straight to that liquidity up there. I mean, it's quite a beautiful trade. I know I don't know how much patience you have, but I had to really slow down a lot over the past year, over the past couple years. I used to really try to enter and slam it before the trade actually had time to make that turn, go transitioning from that those heavy selling and waiting for it to transition into the buying. I had a long time where I was just really impatient and just trying to slam it and getting stopped out all the time. But part of that replay process and going through vetting the edge and that pilot program really kind of taught me that waiting for it to develop a little bit more has, especially if you get this balance, it really gives you a really good edge. I don't remember, was this live? What day was this? The 26th. So this was today. Wow. Is that right?
Yes, this was earlier today.
Yeah.
Wow.
Yes, this morning.
And this was in the morning, right? So let me look at my chart real quick. This was just this was a huge breakout, right? This was, I think you waited, and this was just such a beautiful trade. I think this is great. And you see all that compression down there at the bottom. I mean, you took profit at 96 at liquidity. And I mean, there's no way to know, but that this thing was going to go higher, but and there wasn't really much liquidity. I don't know. You'd have to zoom out a little bit more to see the liquidity, but yeah, that was a lot of compression down there at the bottom. And that compression, when it releases, you don't know how high it can go, but it might go pretty high depending on the market. But that's a great trade. Beautiful.
It's like a 14 point there. Nan, I'm sorry, I kind of jumped the gun by turning it over to DNT immediately. Why don't you first walk us through the trade and tell us your mindset behind it?
Okay, this is mid-morning here, after we came down from the opening, quite a fall. So I saw the Trendline break took place, and then we went sideways for some time, and then I drew that two almost parallel lines there that resembled sort of a wedge, somewhere between a wedge and a flag. And the way it developed, because the line I had to keep extending it, and the way it developed, along with the decline and the P level of around the 68, 70, there was a sense that a reversal was coming. So I just continued to be patient and monitor it, and then I saw a greater number of red dots throughout the whole region there of consolidation, confirmed with the bars, and I felt that there was adequate buyers, to take the price higher. When I zoom out, there was like more liquidity actually on both sides, and In my second trade, which I'll post tomorrow, you'll see that liquidity getting absorbed at the 68.75 later on from this trade, which I took because everything indicated it was going to go there, and it did. But in this one, this was a quick, single, as Bruce would say. I am an options trader, so these quick, impulsive moves, especially when you're zero DTE trading options is what you need. So that's the basis. The trade met all the criterias, but it had the two combination of the trendline break accumulation as well as the flat pattern that gave additional confidence.
Okay. Okay. Great. Great. John, I'll turn it over to you.
Sure. I did respond in the Discord channel earlier about this, and I added an image and I put it in the chat. Could you click on that image, and that'll help me highlight my comments? Because the one thing that I asked Nan immediately, and what I didn't see in her chart, was where her stop is. And I think, when you're mapping out these trades, that stop is as important as anything else. It's as important as the entry. It's as important as the target, because it's going to allow you to calculate the risk to reward. And that risk to reward always has to be working in your favor. So, but what I highlighted, and she did respond and say that her stop would be under 68.75. And I thought that was great, because a lot of people would say under 68.70. So she's placing her stop just underneath that liquidity rather than drawing all the way down to 68.70. So because we do have accumulation here, let me go back to where I have my arrows. Nan has in white boxes around the volume that came into the market after those sell stops, right? So you had the sell stops, you had the absorption there at just above 68.75, the big red dot. I can't tell the time, just before, right in there, Bruce, just before 10:30. We're
10:30. Over here.
Yeah. So I highlighted that, right? So there was absorption there, and then there were buyers that came in right after that, and then it happened again just before 10:35. And so when I see that, to me, it represents a hint of the transfer from sellers coming down to buyers coming in. And so I see where Nan entered at 82. Again, I'm always looking for a little bit of a retracement. And in this instance, I was looking for a little bit of a pullback, because 68.70 was still in there. Those orders to get long were still in there, down there. And there was a little bit at 75, but for the fact that the 68.70 liquidity was still in there, that would be one reason to think that I could expect the market to drift down a little bit to allow me to get long. And then my stop would be just about where Nan said, because if it did take out that 72 stop, they would probably revisit 70. So why hang on? And because of those buyers coming in that I just previously talked about, if nothing else changes, I would probably be looking to take another long at 70. Looking for a reversal down there, because we never know if they're done buying, right? I mean, if that liquidity is still in there, there's a chance this market could reach down and get those fills. I just don't want to finance it. I'll take my spot. I'll take my chance where I have my long indicated. I got a close stop in there. And then if that gets taken out, I would be ready to reload again down there at 70 and capture that accumulation. So those are the key points that I wanted to mention here. But I think it's important, though, to always indicate where your stop is, because that's your exposure, and that's the game. That's everything that we're doing here. And because we see this trade develop over time, that's what I like so much about it. Not only is it a great teaching aid, but it's a great trade, because you can see it developing. And then when you finally enter, you're entering with that transition from net sellers to net buyers, and you're participating with that. And you can limit your risk. The risk to reward is usually in your favor with this trade setup. Back to you, Bruce.
Yeah, Nan, any sort of reply to John?
And she talked about that. I think she did understand.
No, I think John covered everything okay there. So thank you, John.
Sure.
Okay.
It's fun. It's great work, Nana. It really is fun to see. Yeah.
Yeah,
I
and
appreciate it.
I could just add the process of going through all of this. For me, it takes a few minutes, and I'm just careful and detail and all of that. Outside of perfection, but just the process
Mhm.
helps to reinforce the requirements and the criterias,
Mhm.
and so that in itself is perhaps one of the biggest lessons. And then, of course, Bruce, all of your instructions and teaching and so forth are clear, relevant, simple, and it's unique and it's hard to find in this marketplace. But you have certainly made it much more simplified than anything else. So I appreciate that. Thank you.
Oh yeah, sure. No, it's gonna get a lot better real soon too. I can't wait. I know I keep threatening that, but like I will deliver. It, it's just I'm just like very thinly spread over here at Bookmap, and it's hard to find the focus time to
Yeah.
get back to you guys with new educational content. Anyway, I mean, it's like its own product here. And boy, I mean, we got Bookmap and add-ons and new releases and all sorts of other stuff that's always going on. Anyway, so Nana, a few things, and like again, like you're doing great. I mean, you're getting it. Like, you know, I would probably be looking for an entry even in here. Now I don't know. I mean, like I don't know. Just a few comments, and like this is well. Let me give you a few comments that are more constructive, and then I'll just kind of give my kind of take on it, and that's more of a kind of a grain of salt. But number one, again, like I really recommend that you try moving up this volume delta bars. You'll be able to read this better if these are a little taller. I find Shark takes this to like up to here basically.
Yeah.
And I usually take it up to someplace around in here somewhere. And it's really helpful because then now you can really start to go, aha, I see it. I know that this is bigger than these other in here. So I know that buyers are now coming in, and they did break structure, right? And they broke a horizontal, they broke a this diagonal. Now the question is this context, is it ready? And yeah, you recognize that a lot's filled all the way down, right? It's just a note that this kind of liquidity getting filled like up here it's important, but it's more important down here in these areas. So that's really where you want to see it filled because there's still more sellers in here. So we're looking for where they absorb the selling pressure, and right now they didn't, they got filled, but they didn't like totally absorb it. There was still more selling pressure. We want to see when this context is absorbed. This is a good example. That's absorption. Okay. This one here, it trades into it. It's hard to see kind of what happens here when you're zoomed out, but it looks to me also like there's some absorption here. Okay, and then we see a reaction. See how these aren't absorbed? I mean, it just, yeah, we might get a little bump, but like it just keeps going, so that means there's still more aggressive sellers. They have more to sell. So we're putting the context together. That can be really helpful. And then what you recognize here is this structure. And I like the way you're kind of marking in additional structure here because it's not ready yet, here. It's not enough maybe aggressors coming in. It's not enough context over here of absorption, right? So as John said, it might even come down to this 70 level here. It didn't. There was enough here. And then this is where the context is kind of tricky, but you notice this and you mark it up. You notice like the aggressor is starting to come in, right? So our context here is we're getting the passive accumulation here. We're starting to see the aggressive accumulation here, but the structure is still kind of trending down. Okay, so it kind of went from this to this, right? Then the transition kind of unfolds after that. And you know, you're being really patient within these areas and reading that. It's really great. Just technically a flag pattern in here. This is not it. I mean, what you're identifying is correct, but it's like a flag, this kind of behavior, because it's more like it's kind of just dribbling off here. It's not really, I mean, it's trending down, but like what you see in the flag is big impulse move, and then it kind of does this, right? And you don't see sellers really take control in that. It just kind of dribbles off, and then it does something in here, and then you see like the aggressors come in, and then you get that, you know, something like that. And you're recognizing that this is really the same as that, and that's pretty nice. I just technically it isn't a flag pattern, but it's flag like in the behavior. There's more buyers in here than there are sellers, and you got on top of that, you've got this passive accumulation by buyers as well. So you're gonna see some really nice divergence here in the CVD on this move, I imagine. So CVD is probably going like this. Anyway, I'm really happy you don't have CVD in here though, to be honest. But because you're recognizing it here, you're recognizing that structure and the context between the two. Yeah, really very simple, but also very advanced attention to some of these details, and you've really put it together nicely. I would echo John in here. When it comes down to it, this is where the magic really happens. So in the replay modes, work on your stop, or in real time, work on your stop and your entries and your take profits. That would be some ideas from my side.
Yeah, thanks, Bruce. So going back to the passive accumulation, as you commented on those are okay, but they're not everything. And you pointed out at the very bottom those two red dots that you have circled there. I think that the last one, when I zoomed in, actually, that
This one?
that one there, that was okay. But as I zoom in into some of the other ones, that you really can see superficially like this, unless you zoom in,
Yeah.
they pulled it. So, that's one thing I'm learning to pay attention to, is to zoom into these, hot red areas to see really what took place there, as I move along to understand what's going on and where the reversal is taking place. But I get the point of the absorption taking place with those two particular red dots and the others. The bull flag pattern, I knew it was not quite, technically, but it was something developing somewhere in that resemblance that I knew
Yeah.
that it gave me a sense. So I find it helpful, and again, it all came from your teaching videos. And thanks for the tip on increasing the bars at the bottom. I didn't know that feature exists. I've been looking for it, but now I know where it is, so I'll make sure to make the adjustment.
Sure, sure. In fact, let me demo it for you right now. You can see it here, the number here, which this number changes, and what it refers to here is within this viewable range. This is showing 225 in terms of volume. So, I don't really know what this volume is here. I'd say around 200 or so. So it's just relative. If I zoom out, see how it changes dramatically, right? Here's the close, and here's the 200 down here. Now it's 1200. So anyway, just hover over it though, and then left click, hold, and drag. And if you want to be like Shark, that's about as far as you can go there. Anyway, whatever you prefer, just play around with it and find what setting you like the best.
Okay, thanks for the tip. And on the CVD comment you made, there was no divergence on the CVD because
Really?
I looked at that.
Huh.
Right. I don't think it was, to me, it was not significant enough where I could visibly say it had any credit to it.
Okay, I'm
And
kind of surprised, but yeah,
yeah,
I hear you.
for me, it's a distraction. I've learned to not rely on that because it takes away from the focus of, what, the real focus should be concentrated on. So,
Man gets a gold star for that.
Yeah, you
Bruce.
sure
I
do.
love that.
I love hearing that. It's just music to my ears, like you know.
The none. I think that's a really good comment because you identified that second downtrend, like the narrower, like the it was going down at a much steeper pace, and then it tapered off a little bit. It started to narrow off, and you recognize that structure, that second downtrend, and it was still accumulating those buyers there. I think you were 100% right. Your eyes were not on like CBD, your eyes weren't on other things, your eyes were on that structure. And I missed that. I actually got stopped out on right where Bruce was talking about, and I got stopped out and I didn't re-enter. But I didn't see that structure. I was looking at the horizontal structure, but you saw it. I was looking at CBD, I think, and I missed it. So and it's common to miss these, and it's okay to miss these reversals because they can be pretty violent with such, I don't know how many points it was, like 100 or something. But I mean, fading it is kind of wild, right? But I think you did a great job. I was trying to fade it as well. I got stopped. I actually ended up taking a worse entry. So like when you miss these reversals, there's other ways to get into them too, like a low volume pullback, for instance. And that's what I tried. But I think your eyes were where they needed to be. They were looking at that structure. I think that was beautiful. Great job.
yeah, thank you.
Yeah, you need to send them to us more often. No, I'm just kidding.
Yeah, I will. I'm eager to, so I'll try to get it in one per day if I can.
Yeah, it's keep going. I mean, you're really on it, and you're really seeing the pieces come together here. Just a note on this kind of double structure in here. It happens a lot during this trendline break accumulation because the and let me show it with the, if we go to the Bookmap Learning Center and we have this older video in here on inverse head and shoulders. It's in just this form here. You may have seen me go over this before, but like, this kind of flatten. It basically, the downtrend here, it starts to kind of flatten out a little bit, and you'll see, like, instead of it going off here or here, it's still kind of, here it made kind of an equal high, and then but there's still some more selling. This is where you kind of see the shift typically, that we're talking about, from passive to aggressive and all buying though. And then anyway, so this happens a lot. So guys, just because the trend line breaks doesn't mean that this is going to go at that point. Where I think it's helpful is to look at the passive liquidity down in these levels here, in these levels down here, and then that context. Like if there was maybe some buying here, but it still went lower, there's more buying in here after the passive liquidity gets filled, then it's more likely. Right now here, more passive accumulation here and more aggressive buying here. Okay, so now we've get this kind of tapering off, equal. Now we're getting the reversal, and this transition unfolds and takes place. So it really is about understanding this context between the passive accumulation and aggressive accumulation within the structure. And if there's more buying coming back in and they start to break it, that's what we're looking for. And we're looking for price exploration to the upside. And then look for your targets in structure and high liquidity. And you're good to go. So yeah, so keep going, Nan. It's really inspiring.
Thank you, Bruce, and thanks to all the coaches and everyone else. I appreciate it.
Sure. All right, so let's move on to someone else here, and let me see what we've got here. Just a minute. Okay. Who else is in the room right now as well? Shark is not in here. Shark is away. Laura is in here. No, she's not in here. Let's see. Had a few from her. And I also had a few from, let's see. Yeah, I've got a few from TD. We went over you first time last week. So why don't we take a look at one of yours in here? Trading stocks. I was really excited to see the stock trader, I just love the news behind the stocks. You can go out and search, and you're gonna find something. And it's going to have news behind it, and it's going to be moving. And that makes life so much easier. You just have to go find it, though. That's the issue. So let's see, is TD? Yeah, TD's here. TD, let's invite you up to the stage. And
Hey everyone.
Hey, how are you doing?
Good. How about you guys?
Doing well. So let's see. I didn't even know what symbol this is. Leibu or something. And why don't you just walk us through your thought process here?
I'm not getting. Oh, I see it now. Okay, hold on one sec here. I'm having a little bit of an issue seeing the live screen. Do you have it up on the YouTube? I'm for some reason.
Oh, so YouTube, just hit the refresh button, because like sometimes it does this for me as well. Like sometimes it doesn't keep up with the live market.
Okay.
So, and it's going to be a few seconds delayed over there too. So keep that in mind.
Right. So
oh, you know what? I'm sorry. Let me interrupt you one more time. Okay,
No,
so
fine.
this is what you can do here. is you come over here, and this is probably what you see, and you see the chat over here, right?
Yeah.
Okay, so hover over in here and see this button down here. Pop out.
Yeah.
Click on that. Okay, and then what that will do is it will pop out the presentation part, and that'll be different than the chat, or you can open the chat as well, but that maybe that helps. I don't know.
Yeah, for whatever reason. All right, let's see here. Okay. All right. I'm good.
Okay.
Yeah, could you? Yeah, I'm good now. Okay, so yeah, LABU is a it's a leveraged ETF,
Okay.
and yeah, perfect. I can see it now. And so I've been kind of searching for these ETFs that have a good liquidity map. A lot of them, there's so much algos that it's hard to see what's going on. And this tends to be one of the better ones. So on this, I'm trying to look for a TLBA setup here. So the first part of this is looking for the passive accumulation. So I marked 3 different levels. And actually there was to me, it appeared to be more than 3. I marked up 4. And I have the key time frame as the February 2nd high, and mark the trend line. So trying to get better, drawing my trend lines after that last feedback, and I drew. Yeah, okay. So I drew a couple trend lines, and it's interesting. These past 2 coaching, or this last coaching session has been really huge for me, because I realized I'm sort of misreading some of these concepts or not applying them correctly. So like as I look back on this one, my entry is a little early to me, to be honest with you, now that I'm looking at this. The second time I would have liked to seen the book sweep down and then the pullback. So see where my entry is. And I'll be curious to hear what everybody's thoughts are on that. But where I enter, I feel like I maybe entered early. And I didn't wait for the book sweep and then the pullback up further to the right. But it ended up working good. Some things that are also, I haven't marked up on this chart, but now are kind of, my eyes are kind of getting drawn to them, is that you see those 2 vertical dashed lines. Yeah, like sort of right above the VWAP, you can see passive liquidity coming in to the book. It's, with these algos, it gets a little bit difficult to see, but like around the 173 price level in between those 2 vertical lines. I don't know if you see that, Bruce.
This here.
For some reason, I'm not seeing your cursor on the YouTube.
Okay.
Oh, yeah. Okay. No. Yeah, I just saw it. Yeah, it was right.
Okay.
Yeah, the 173 level in between the 2 vertical white dash lines. So now my eye kind of would be more drawn to that specifically. So maybe this wasn't too early of an entry, honestly. Now that I'm seeing, and thanks to John, I'm kind of really keeping an eye out for this stuff. So that's just another clue that now the price is something to go to. And then, in my markup here, I noted target VWAP. I've actually started taking VWAP off my charts and just like some of those liquidity levels towards the right side of that the picture right above VWAP. I think now I'd be kind of looking for those as my targets. Ended up working out here. But, and then, yeah, I've also heard you in some of your webinars, Bruce, talk about this, transition from the sell side to the buy side. So at the bottom of the picture, that's where I kind of, it just felt like you could see that transition happening. And then, one other thing I also really look for on these pullbacks is it's just on the volume bars, number 4. It's just, you got your sellers you can see aggressive accumulation coming in, and there's just very little buyers in the pullback area as well. So, and then I kind of marked that between the 2 vertical white dash lines as well. Just that note at number 4.
Okay.
So that's kind of how I saw it.
Okay. Let's turn it over to John. Why don't you jump in? This is actually, what is it? The biotech 3 times bull shares index. Is that correct, TD?
Mm-hmm.
Okay.
And what I actually traded LABD, which is LABU is leveraged with the index. LABD is the opposite.
Oh, okay.
So, but the chart's the heat map is not as clean. So I use this as my guide for when I enter.
Okay. So let's see. John, if you have any.
Okay. Sure. Well, 2 general comments and then 1 comment about the chart. As far as the leverage ETFs, I like TQQQ, but I do my analysis work on the QQQ because I'll get a better liquidity map. And then I just trade off, once I get the signal, once I get the read off the QQQ chart, and then merely place the trade onto the leveraged instrument. So that's one way to go about getting a little bit better picture, because the liquidity map on the leverage products, they can be a little sparse at times. And then my second comment is I like the VWAP, especially when liquidity lines up with it. And you can see later on in near 10 o'clock on this, liquidity did come in right above VWAP. And so that can be for a very powerful combination. VWAP sitting out there by itself, really it's a moving average. I always have to remind myself that there's nothing magical about it, except when liquidity comes in, that tells me that there are others looking at that same level. So the combination of the 2, I think, can be pretty powerful, and that's just something you'll have to examine with screen time. And then the comment specifically about this read is that I'm still seeing liquidity above at 177. And so for me to get short, I would have liked for the trade to happen up there. I'd like to see an exchange of trade happen at that 177, perhaps take it out but that's a level that concurs with your Feb 2 high. So the market's seeing that as significant. And because I don't see a whole lot of liquidity below the entry, or as much, I still see that there's an imbalance to the upside, and I don't quite see the transition yet. Now the market did come down, and that's great, but for me to enter, I need to see kind of a flip. And I'm not seeing it on this chart. I think there's a better look with respect to liquidity for making a case for getting short. Does that make sense to you?
Seeing it, yeah, it definitely does.
Okay.
Yeah, so because the liquidity is up there basically, and there's a lot of it.
Yeah.
The risk is that they'll just go to where the liquidity is.
And
So
your
that
risk would have
depends
to be over it, right? I mean,
Right.
or you would actually, your expectation would be to revisit that level. My stop would be pretty close because kind of like on Nan's trade, you know, I would want to reload and see what happens up there if I did get stopped out. You know, if I entered where you did, my stop would be just slightly over your trend line. I wouldn't want to absorb that drawdown all the way up there to that liquidity. I'll take the little bump and bruise, reload, and then see what happens if if the market did return up to that 177 level. But I encourage your effort to look for the ETFs and their um, multiples. They're good instruments, especially in these markets. They're so volatile. Yeah.
I used to think that seeing that solid band of liquidity above it when you would go short, for example, in this case, was a good thing, because it's essentially like, you know, scaring away the buyers essentially.
Mm-hmm.
But I also see, like, it would have been nice to see more come on the bid side.
Mm-hmm. Mm-hmm. And you're absolutely right. I mean, there is pressure up there, 177. The risk is the difference between where your entry is and that 177, that space in between. You know, what happens in there? There's nothing in there in terms of sellers to hold that market from going up. Right?
Yeah.
That's the risk. Now, if you're trading right up above that, right at that 177, and you're struggling there, yeah, I can see your argument for that being resistance. But sitting up there, you know, $1.50 away, that's a lot of space to answer that question, and it's a risk that I wouldn't be willing to take to address that.
So if you, for example, on this one, if you know, so at the 173 price level, we see that passive accumulation come on the buy side. And the price was very close to that 177 level. So, like, for example, would that be enough for you to go short there, with knowing that you have the band of liquidity, like buffer essentially, or?
Sure. Yeah.
Okay.
Yeah, because I know where I need to be in terms of my risk. If it starts to buy through, if the market starts to buy through that, I know what I need to do. I need to take
Right.
cover real quick. But it's sort of like getting behind 1,000 soldiers and taking a hill. You know, you're behind them. You're right with you, fellas. You go first.
Yep.
It's kind of the idea with that. And so, two things: in order to get short, I'd like to see a little bit more liquidity come in. You saw some liquidity came in there at 173 essentially, and then they took it off. They canceled it, and the market just kind of meandered down. What I often see when that liquidity comes in is that there's a reaction. So there's two components. There's the liquidity, and then there's the volume. It's not enough to have either one. I want to have both. I want to see liquidity there, which represents to me an interest to engage, and then I want to see volume trading to it. And I'm not seeing really that combination here for your entry. For me, I think you had some other trades in here that showed a little bit better story.
Okay.
Agreed? Yeah.
Yeah. No.
Okay.
That makes sense.
But it's a good read. I mean, it's just a good read. But yeah, you hear me.
DMT, any comments?
Yeah, I think that's everything John said was really good, especially on stocks. I don't really, and the ETFs, since I don't really trade them as much, I couldn't tell you, but the break of that second trend line, which I don't know if that was even a trend line, but your second support line that you drew there, it broke, but it didn't break on really that. It did break on high volume, but it didn't continue with high volume. So like what John was saying, it didn't really even get that impulse down with volume. But what I wanted to mention, everything John said, I want to say everything that he said was great. Notice the entry that you took. And if you did still want to enter this for some reason, notice, you got that pullback back up to the right after you entered, the pullback to that box that you drew. That is almost the same price, just, I don't know, maybe like 50 cents off from where you entered. So if you waited for since let's say you were waiting for that liquidity to get filled, it never got filled, and then your structure started to break, and then you were still wanting to get short. Well, if you skipped that entry that you took, which was an aggressive entry, if you would have waited for the pullback, that pullback was pretty dang close to where you entered anyways. So it's not, I wouldn't say confirmation, but at least the you started to see a little bit more solidification of your idea that the market was going down, and then you waited for the pullback, and it does give you that pullback. It wasn't quite where your entry was, maybe about 50 cents off, but it's close. And I usually recognize that a lot with ES is I'll enter aggressively, and a lot of times I'm like, man, dang it, because it pulls back. It almost gives you that second chance a lot of the time to enter. And the entry is maybe a little bit off, but it's not enough to really make that big of a difference if your target is still giving you that good risk factor. Does that kind of make sense?
Yes, makes total sense.
So everything that John said was really good, because let's say he's basically saying, like, there's a lot here that kind of should put your aggressive entry aside and wait. And if you waited and you kind of get that, he said, meandering down, and then you get that pullback up to the top, or you get that pullback, and if you still wanted to enter, then that might be a decent entry. And then you can put your stop just right above that, right where you kind of entered at, where you see that you have like a rectangle going from the left all the way to the middle, kind of that whole structure right there. Yeah. And if you put your stop right above that, then that's like a small risk. You can be, yeah, right there. You can just put your stop right above that, and you entered on that pullback. Does that kind of make sense?
Yep,
You skipped on the
I'm totally
yeah,
following
you
you.
you
That's
skipped
awesome.
on the aggressive entry. Wait for the less aggressive entry, and
Yep.
then put your stop right above that. And that's kind of I enter aggressively, and I'm always like, oh man, I should have just waited, because you get that pullback a lot of times, and it's like you took a pretty big risk for something that you could probably just have waited on, and you almost get the same entry a lot of the time. Sometimes not, and sometimes it is worth taking that aggressive entry, but sometimes it's not. So you kind of have to weigh it. But usually that less aggressive entry turns out to be almost very similar to the aggressive entry.
Yeah. All right. Hey guys, thanks so much. I actually have to take my son to a doctor's appointment now, but I feel like I'm learning so much from you all, and just really grateful for this what you all are doing. So
Yeah, it's
thank you.
TD. I'm gonna follow up, and maybe you want to watch the recording later. But so like maybe in about an hour and 20 minutes into it, or something like that.
Yeah.
But because there's some follow-up stuff I want to kind of cover here as well.
Perfect.
For
Thank
you.
you so much.
Yep, sure. But keep pushing, and you're like you said, you're improving, and this is it's really great.
Yeah. Thanks so much, guys. Take care.
Okay.
Take it easy.
Thank you.
I was just going to jump in and kind of echo what you guys are saying as well. But stocks, I just view it as a different animal, and it's kind of its own little ecosystem, So, and I'll just kind of go through it one by one in here. I think like the high liquidity. This is a hard heat map to read. It's an algo, and but we want to identify when, like, this is the way I look at like the S&P, or I'm sorry, the SPY and the Qs. The same way. It's like these, you can see this kind of algo behavior, right? And it's hard to read. So how do you know? Well, where really did it transact? Okay, here for sure, right? Here for sure, for sure, for sure. Okay, here we're still going up, and it's not, you know, it's blazing right through it basically. So here though, it's a little different, and here it trades into it, and we get a reaction. In fact, we break this structure here. I would really want to see this trade up here or this trade in here, and it didn't. So this is still, you know, to me, this still looks like it wants to go up. In fact, I view this as the flag pattern in here. I'm with you, John, on this. I don't see the transition yet. I want to see these kinds of bars over here.
Yes.
And then this is for me, like, they pulled. This is the same as this or this, you know. So I'm not getting much out of this at all. I want to see them transact, so for me, this is like hands off for a reversal. You know, stay away. Interestingly enough, here's what it did. Let me show you. And this is the structure here. Now this is a 5-minute, right? And here it is in here. And what he was talking about was this structure from the second over here, right? And it's breaking above that, he's looking for fading it back in. Okay, so this is the first break above it since February 2nd. Now this is a strong impulse move though, and I wonder what, you know, the news is on it. So TD, like, you know, we saw this last week. You know, I don't know what if there was news, the impetus moving this thing, but you're going counter. It looks like you're going counter to that news event. Funny enough, it worked out great, and it worked out. This is very much like a flag pattern here. This is basically it. Here's your impulse move, and here's your flagging. And then it kind of, you know, end of the day here, you know, this is what it did. Next day, it breaks out and continues on up. This is another thing that I've noticed with the stocks. This first move in here, like, you know, maybe it goes here. Maybe it continues on up to the upside. It didn't. I think you had the right idea to fade it in essence. That it should probably come back into the middle, but that this next day though, keep this on the watch list. This thing gapped up and it just went, and this is a much easier trade over here on the stocks. This is a very deep pullback as well here, anyway, yeah, that's kind of what I see in here. And then you know, we don't see the break here to the downside. I don't see the transition taking place. If these were really big red bars over here, and I really have to see in this one for this stock, I think I'd have to see it get filled up here, this liquidity up here. Then if I see these big, it has to be like twice the size of these, I think. Then I'd be interested. And then structurally, like I think, you know, just don't worry too much about being really precise with structure in terms of, like, you know, the trend line and, you know, 3 and it's touching these things, and just understand structure. And the structure is, okay, it broke that and now it's going sideways. That's the structure. It broke out here, it failed though, and it's back in the range here. So now we're looking for the order flow within this structure to give us insight to where it might go and where it might break. Anyway, that's my 2 cents worth. I see here. Any other follow-up, guys? I think we covered it pretty well for TD. Okay. All right. Let's see here. What else do we have here? Got Laura, and then you know what? Like I have Shark as well, but and D&T, I don't have yours up. But John, I do have yours. And I thought, we haven't covered some of your trades in a while. Let's go. I don't know if maybe this one or there's another one as well here. So let's see, which one was it? It was this one or this one. And I don't know whatever one you prefer.
No, your choice. They're very similar.
Okay.
Take the short.
This
Do
one?
the short.
Yeah,
Okay.
let's do this
Yeah.
one. Okay.
Okay. Can you make it?
There we go. Okay. Well, then walk us through, John.
Okay. Well, I like to frame up my trades with levels, following the procedure. So my selection is a gamma. And in this instance, there was a lot of call gamma sitting up there at 69.10. And these are 0 DTE options. And we're starting to hit in the afternoon where once those price levels are met, what we often find is those levels, those option positions begin to get closed out. And when they do, so do the hedges against that advance. So we begin to see some selling into the market. So that's really the idea behind tracking those gamma levels that I would expect the hedges to come off. So I'm trying to synchronize and participate with the hedging community. So leading up to that price level, we see accumulation, liquidity in the market at 68.09, it's 69.08, and it's 69.10, and they all get filled. And then we see some bit of sideways action, and then we see liquidity coming into the market below, new liquidity down there at 69.05, and that's a great marker for me. To me, that demonstrates a flip in the interest in the book. And when that happens, we see a break of the structure of the little trend line that I draw in there in that little pattern. I can place my stop just over the entry, the liquidity, and I place my first target at that liquidity that just came into the market, and then see if I can ride it back down to where the move began. And 6,900 is a significant level, and a lot of people pay attention to it. And you can see that as the trade progressed, liquidity did come into the market and reinforce the idea that maybe we would get down to that 69, and we did. But the main thing is that I felt very confident that I could at least get to that first target with that new liquidity coming in and seeing how there was less interest in buying once we took out that 69.10 area of that liquidity. And that really is all there is to that one, actually.
Yeah. It's beautiful stuff, John. I mean, one thing after another, or one after another here. I think everything you noted in here, it's all extremely well marked up and documented. If anyone has any questions on this, then please ask. I think what I would like to do and comment on is kind of the bigger picture of what's, John mentioned it, but like what's not marked up here. Yeah, it is marked up. This gamma call level, he's looking at these, and now he's got this beautiful context at the level where there's large gamma calls. Okay, that skew is really, really important. So he's thinking something is going to happen up here, and order flow is supporting that idea.
Yes.
And now it's time to look for an entry to go with that idea. So it's kind of like what we covered a bit earlier with the Bookmap Academy process of the impetus, the key level, the scenario, and then down to the setup and the mechanics. But the 1, 2, and 3, the impetus and the key level and the scenario here, you had that all in your mind already. Like, this is what I'm looking for at this price level, and it's giving it to you,
Yes.
one after another. Oh, here. Look at all this absorption, or a lot of this liquidity getting filled, high liquidity,
Yes.
right before the level and then at the level.
Yes.
Doesn't get through it. We get a bit of a pullback. You see you see your liquidity come in. That's where you're like, aha, okay.
Yep.
Now I know that there's going to be a lot of gamma or a lot of options up here. I already know there's a lot of absorption, so there's a lot of sellers. I'm looking for a small structural break. I'm in. I'm looking for my target to my liquidity level. Done deal. So just beautiful logic and reasoning behind it, and execution as well. So but those other things, like, it's not this time of day, it's this gamma level and what traders are going to be doing, the larger players here are going to be doing, and putting those pieces together within the setup. If this setup happened someplace else and it wasn't a large gamma level, maybe it was a minor gamma level, maybe you just chop around that level for a while. I don't know. I mean, I don't trade these levels, so I don't know what to say there, but I just
No, that you're exactly right, because especially with the 0 DTE options, they're going to expire shortly in a couple of hours. So if you're an options buyer and you're hitting at the money, which is where this is, this strike has been one that was very active during the course of the day. So if you're a buyer of these options, your best price to get out is going to be at the money, at the strike, because gamma, that is the rate of change. So if delta is the change of the option versus the underlying, gamma is the change in delta. It's how fast it's accelerating, and it's going to peak out when it reaches at the money. And that's why you see a lot of these option buyers are going to take their profits at the strike. And we expect that. And when we see it, and then I see the order flow complement that, it's a great 1-2 punch in terms of planning the trade with that logic. And then, as you say, the liquidity comes in below and they really start to show their hand. And in fact, that liquidity coming in below where I marked number 4, that's what was missing from the last chart that we looked at with TD.
right.
I need to have that. I need to show some interest below of where I can target that first target, that first trade, and get that off, bring my stop down to break even. So my management is based upon getting that first target, which is based upon that liquidity coming into the market. So one kind of follows the other. And then that's how I can measure, monitor and manage my exposure. And then from that point forward, I have a profitable trade. And I can very easily sit back and know that I'm not going to lose, and reach my target, because it doesn't go down like a dart. It kind of meanders its way down, but it does go down there. And I just followed my stop above the liquidity markers. So, yeah.
Yeah. Really, really, really nice stuff.
Thanks.
So for everybody on here, or watching and listening and learning here, it's all marked up here. He's got it all here, but this is a little different. I mean, than trendline break accumulation. I mean, here obviously you see lots of buying, but it's into all this passive liquidity.
Yep.
Okay, and it's a key level, and the selling starts to pick up here. But it's a little different than the structures that we were talking about, just because of the option level.
Yeah.
And because of that, I mean, otherwise I would say, to non and TD or others, that this is starting to kind of flag a little bit. I mean, this is the impulse move here. But you've got these other factors in here. and that you're paying high attention to them, and you know the behavior around those areas, and that's your edge. Don't be confused with what John is covering in here. This is the way that he trades, and he looks at his key level, and he knows the behavior around these key levels, and he set it up just beautifully here.
And that's really the hedging community that's buying in there. I mean, they're buying in there because they have to.
Yeah.
You know, they wrote those calls up there, so they have to do that to maintain a neutral stance. They're not in there to take a speculative risk or a directional risk. They're in there to write paper and to stay neutral.
Right.
So that's what I see with that. Yeah. And
Right.
when that cuts off, well, then that's an indication for me that they're saying, okay, we no longer have to hedge because there aren't any calls above it, and the positions are coming off that we had to hedge, so they can take off their hedges,
So
and down we come.
Yeah, exactly.
Yeah.
And then like another thing that I think is also key, like, well, first off, you're reducing risk and you're looking for your high probability. This is the way that you are managing your risk. This is also kind of not on the chart here. We haven't talked about it for a while, but I love it. He's looking for a high probability target first.
Yeah.
Take some off, and then get a runner. He's paying himself here, pays his bills. It's hits like 80% of the time. He's got numbers behind it. He knows. And then, but he said earlier though, well, this is where it wants to go. It's the figure here for options, and like this is more likely. It kind of trading back down into this area here. Anyway, I speculate. You mentioned it, but I just it caught my interest, so I thought I'd mention it. That's everything I've got on. So
well, thank you.
D&T, do you want to jump in?
Not much to say on this.
I'm sorry.
This was. Oh, you good?
I do that to trade in his life all the time.
I sounded just like and then that.
Yeah. No, just whatever you guys said before. It was great.
No, that's cool. This is nice. I mean, this is a good example of what I just mentioned on the last trade from TD. And I mean, obviously it's not, you just highlighted and mentioned the important part, which is it's not what we have been talking about in the pilot program, the trendline break accumulation, but this is one of those cases where the aggressive entry is you might not get this entry again. It's different. It's like an impulse. You're like fading an impulse type. I don't know how to put it, but yeah, you're anticipating it to go down. So you're entering more aggressively, trying to get that better price at a key location. So basically this is like really where the playbook makes the difference. And your playbook is different, like let's say somebody who's just starting to learn the setup, the trendline break accumulation setup, that might not have their playbook and that might not have like the key levels and impetus and stuff like that completely or built out or yet. So this is one of the cases where entering aggressively kind of makes sense, where you need you have the structure to give you defined risk, and you enter aggressively and you go behind that. You go behind that structure, and that's kind of just what I wanted to mention, being that difference that you mentioned, that you talked about from the trendline break accumulation. So somebody who's newer might not have took this, and let's say who's learning the trendline break accumulation, and that's totally fine. I just wanted to highlight that this is one of the cases where experience comes into play, where you've done this like thousands of times. John's done this thousands of times, and he trails behind. He takes that stop where he can get a good price and get a good stop at the same time. a lot of the examples that we see in the trendline break accumulation, you get an entry, but that entry is not really that optimal, especially if you have a if you're used to using tighter stops. Usually with the trendline break accumulation, those stops are quite wide. So yeah, as you start to go through it and get more iterations and start to build out your playbook, you start to understand the difference of when you can take that aggressive entry and when you shouldn't take that aggressive entry. And this is a good example of when somebody who's had their playbook kind of built out and takes that aggressive entry and they trail behind that structure. See, and the thing is a lot of times it doesn't work out. That's why we mentioned not to do that. Just keep doing we got to keep doing the iterations, and we got to keep learning when these trades actually work out. The trendline break accumulation it's a developed trade. This is not that trade. This is a different trade. This is different. So I'm glad you mentioned that, Bruce, and I just kind of wanted to throw that out there.
Yeah. Thanks.
Hopefully that makes sense.
Absolutely. I mean, DNT, because if others look at this and go, well, I'm studying the trendline break accumulation and I don't see it here, and it's like, well, that's because it's not that. It's something very different. Actually, exactly the process and the numbered elements here that he's got is exactly the process of the pilot program. It's just this is not the setup.
Right.
Okay, so big distinction there. His setup is perfect for what he's looking for. He's understanding these players here that are selling the options up in here. Okay, the large call gamma up in here. So
and taking a 10-point profit is modest. That's good. That's like it's perfect for making money. And it's a relief from this rally, right, John?
Yes.
yeah. So
yeah, it fits the trade. It fits the trade very well.
Oh yeah, I mean, like as John covered it, and you can see it. It's all visual. It's so visual as well. So from what he said and what he's looking for in his setup is visualized here extremely well. It's just it's not the trendline break accumulation. It is a different setup completely, and it has to deal with these options levels, so anyway, yeah, it's a. I just don't want people to get confused looking at this. John does this, DNT does that, and someone else does something else.
I meant modest as in it fits the trade, John. I didn't mean anything else. 10 points is amazing.
That's my wheelhouse. But I guess one last point to make with this is that while it may look aggressive, without number 4, without that new liquidity coming in at 69.05, this trade doesn't happen. That's vital.
Yeah. So you're watching this.
I'm watching this develop,
and then as soon as you're like,
that pops,
oh yeah, now I'm interested.
I got you now.
Yeah.
Yes. Yeah. Exactly. That's a catalyst.
Yeah.
Because yes. Yeah.
And another thing, John, I mean, I like this in here. Like it is aggressive entry, but this is what I think. I especially Bookmap. You get a feel for the order flow. This is my take on it. I don't listen to what you have to say, but you start to know that I'm starting to see some of those sellers coming in. I'm looking for it now. I'm pretty sure they're going to break this. I don't need to look for the pullback in here, and then because it might not pull back.
Yeah.
And you've got your reasons. You got your target. You've got
Yep.
all of these things, and you're starting to see it. You're looking for that break, looking for it, and you start to see it ramp up in here, and it's like, okay, I got it. Like,
Yeah.
I'm looking for it to
Yeah.
break.
Yeah, that's where the hedgers are going to jump on it. Yeah, absolutely.
Yeah,
That's
and
right.
it's really great because when you get that kind of feel for it, like it just it like just sets your mind at ease. Like, okay, like I this is confirming it. And I'm looking for it, and here they are, and it played out.
Yep.
And then that builds
Yeah,
your
I think.
confidence.
Yep. I think Steven said it right. It's my bread and butter trade, and that's true. Yeah, that is true. This is it. Yep.
Nice, nice. Okay. Well, I think we kind of beat that one to death too. It's really nice to go over one of your trades. It's been a while.
We
It
could
has
beat
been a
it
while.
some more. There's still some life in it.
I don't know.
There's TD. I just mentioned because we talked about TD. You can enter on anticipating the break, or you can try to wait for that pullback. And like you just mentioned, you might not get that pullback, and that's always the fear. And the anticipation break is it's very close to the pullback entry as well. So those two entries are very similar. It's a couple ticks off, but it's just something that I've noticed that I just wanted to throw out there again.
So Non raised his hand, so I thought I'd invite him back up. Non, because maybe you were confused with some of the earlier things. So if you had something you wanted to mention or ask. Non? Can't hear you.
He's off mute.
Yeah.
Hmm.
Yeah, can't hear you.
No.
Oh, wait, it looks like he's even. Okay. He entered.
Yeah.
I still don't hear you, Non.
Teasing us. Okay.
All right. Well, Non, if it's something, then you can write it into the chat here, or you can write it into the Bookmap Academy chat or pilot program chat, and put attention to John in there, or whomever you were going to ask the question to. All right, so guys, let's wrap it up. I think we had some nice trades, some good to have some people up on the stage and listen to them and get their kind of mindset and what they're working on, etc. And that's a big part of this academy is opening up that mic for you, and we want to get the feel from you where you're coming from. Let's see, DNT, we'll let you take it out, and we'll wrap it up here, and we'll call it a session.
Cool. I just want to thank Bruce. I mean, thanking our everyday hero here. Like you show up, our coaches show up all the time, and you guys are amazing. You guys put out a lot of stuff for us, and thank Bookmap for supporting its traders. And this is one of those companies that just cares about its traders, and it's the better we do, the better they do. And I recommend anybody who's with Bookmap or who wants to join the pilot program, I highly recommend it. Great place to get in, form an edge, and form a process if you don't really have one. It's a great place to start. And just thank you for going out on a limb for us and getting this started. I really appreciate it. And thank you for everything, Bruce. Appreciate it. And everybody else, take care.
Wonderful. Thank you, DNT, John, and everyone else who showed up and covered. But have a good night. Thank you, DNT.
Take care. Have a good weekend.